I am almost always a believer in holding on to rental property as long as you possibly can, but I am selling one of my two family properties, and I'm gonna let you guys in on why I think it's a good decision. Maybe some of you out there are in a similar position. You have property that hasn't been performing well or just on the fence about selling. I'm gonna walk you through my decision process, and hopefully you can learn a bit to apply to your own situation or just how to evaluate selling in general. So to paint the picture for you, this property is located in a highly appreciating area just north of Boston, and I've owned it with my father since 2015. We bought it for $510,000, renovated it, rented it, made great cash flow up until 2018 when it appraised for $860,000, and we took out about $250,000 in a cash out refinance. Took that money, bought another two family in an off-market deal, which has been a great investment, but with the increased payment from the refinance, we've only been getting about $500 to $1,000 a month in cash flow without being able to add too much more value. So being an investor that prioritizes cash flow, I've had this property on my radar to potentially sell since the cash flow doesn't really justify the management and upkeep of the place, which I myself am responsible for. But on the other hand, you look back at the insane amount of value created and the fact that it's still in an appreciating area with high rental demand, and it's tough to wrap your head around making a decision to sell. So when I really sat down and tried to quantify it, here is what I settled on. First was just looking at the net income for the past few years and comparing that with how much time and effort I'd spent managing the property, and I definitely felt like it wasn't worth it. So we'll call that sell indicator number one. Income isn't worth the effort. So I'm a numbers guy, and I like to be able to back my decisions with data. Like whenever I buy a property, I thoroughly underwrite it to get to some sort of ROI, do a 5-year pro forma, whatever I need to get me comfortable with the decision. But on the selling end, you need to think about things differently, because if you took the ROI on this property, it would be astronomical. Like, yeah, pat myself on the back, but it doesn't help rationalize selling. It's really more forward-looking than anything else. So the metric that really applies in this situation is called the return on equity, or ROE. So this number represents the current return you're getting on the current amount of equity locked up in your property. So I looked at my financials, and we have about $266,000 of equity. Net income is $14,500 a year. You divide those and we get around a 5.5% ROE. But since this property will appreciate, I need to add in a reasonable estimate of that increase, which in this market, I estimate will average about 2% a year. So 7.5% ROE total, which isn't terrible, but now we have a benchmark return to compare this to other investments, right? And I know for a fact that I can at least get a 5-ish% return on a high yield savings account, T-bills, something safe like that. I can reasonably make the same, if not more, in the stock market, and then I can make a decent amount more through some accredited investments that have a higher return but also have higher risk. And all of these investments are 100% passive. So I no longer have to manage the property, worry about emergency calls, maintenance, snow removal, all that BS. So I'm gonna call this sell indicator number two, ROE equal to or lesser than passive investments. And just another note on this, something else I've been doing since it's been so difficult in this market to find deals is reinvesting in my current portfolio to maximize rents. Like I'm really looking at those projects that will add revenue, calculating an ROI, and prioritizing those if that return would beat any passive investments. So like for this project specifically, I'm up in the air between investing the proceeds in the market or using them to add a bath in one of our short-term rentals. So that could go either way when I really hammer out the specifics. Now my last indicator seems pretty simple, but it's the most important of them all. It's the fact that we just need the money. So my dad is semi-retired. He wants to have more liquid savings. I recently had a kid. I have some high interest debt I need to pay off. And most of the proceeds will be reinvested anyway, but the portion that goes to paying off debt, it's really taking a lot of stress off our personal life. And the benefits of having a good chunk in savings, some liquidity, it's really comforting knowing we have more of a cash reserve and also some funds to jump in on new investments when I get the opportunity. So I guess my number 3 sell indicator was how much the cash proceeds would impact my life. So to assess the true proceeds of a sale, and this is something you absolutely need to do before you sell, is to figure out your after-tax proceeds, because that's what you ultimately end up with. So it's a good idea to work with an accountant on this, because this number isn't as straightforward as it seems. I'm going to spare you the boredom of walking through the calculation, but if you want to get a more detailed understanding, you can click the video link above, or I also linked it in the description. Now, as much as I hate selling investment property, this one was giving me all the indications that it was just the right time to do it. I was also just coming off a renovation that went over $100,000 over budget, and that really didn't help my situation. So if you want to learn more about that, you can click into the video at the end of this segment. And since this is an ongoing project, I'm at least going to put out a couple more videos on the sales process, renovations I did to get it ready for sale, and also how I'm going about selling it by owner. So definitely subscribe to the channel so you can follow along.